Let's get into our market review, and you know what our current thesis is. We're talking about a buy climax that we're seeing play out right now. So what we're expecting to happen is for stocks to pop higher before they finally turn around and make that 10 to 20% correction. But the correction will be a medium-term correction, because after that 20% drop, we may go sideways for a few months, maybe even 6 months. Long-term, though, we think the bull market is still intact. So let's jump into the data this week to see if this thesis is still in play. And as always, our research is coming straight from MacroOps, which is our global macro research and consulting firm. Our head researcher there, Alex, does all the hard work, and then I just tell you about it. Great job for me. So right here, we got Bank of America's ratio charts. And what they're showing is that the Reflation trade, which includes energy, financials, industrials, and materials, they're about to take back leadership soon. So if we zoom in these charts, you can see financials right here. They're saying there is a huge double bottom happening from 2008 to what happened with COVID. And now they think they're going to launch off from here. And this is financials relative to the S&P. All these charts that we're about to see are relative to the S&P. That's why it's a ratio chart. Industrials here, you see they're rebounding from a huge low in 2020, and they're making a higher low each time, meaning they got a lot of room to run until they finally hit this resistance level. And we got materials that looks like they had a head and shoulders bottom, but it was invalidated because of the price action, just broke below that right shoulder. So this is probably the worst looking chart, had the failed breakout right here, but now they would need an uptick above the weekly moving average to still be in play. And then we got energy here, which has a potential head and shoulders bottom, meaning if it holds, it could launch much higher. Speaking of energy, we saw a big bounce in crude that we were talking about last week. Because remember, our backtester said after hitting those oversold conditions, you likely get good movement. Sure enough, it happened. Breadth in the equity space is also coming off bombed out conditions. So this is usually good for a short-term bottom, if not something more. So once again, you want to keep your eye on the energy section. We talked about this last week. And did I say section? I meant sector. Because the energy sector has the strongest clustering of MACD buy signals right now too. And the other reflation sectors are right behind it. So you got materials here, but energy is at 70%. So it's ready to run. Financials look good too though. Now we got a new sector tab in our HUD, which is like our dashboard for our members in the collective, which if you don't know about the collective, it's our most premium offering for basically anyone who's a professional in this market. So we got a bunch of fund managers in there. And we got our own mini Bloomberg as well. But anyway, what it's saying is that even after its last 12-month run, which has been a strong one, the energy sector still trades near its cheapest valuation relative to its history. So energy is very cheap right now, and it's well below its peer group. So you can see in all of these different ways to value it, energy is a very low valuation, which is good, meaning it has more room to run. Reflation names, which is what we just talked about, and small caps have held up considerably well over the last few months, despite the spread of this Delta variant. It's spreading across the world, including the two largest economies. But despite the rise in cases, most countries are actually easing restrictions, not adding them. Which, I don't know how you would even add restrictions again after this point. No one's going to follow it. I live in a college town, and it is absolutely nuts right now. Move-in week was last week. School just started today. City is packed. Block parties everywhere. And this is more than what usually happens every year. So I'm sure that same thing is happening in most places right now. Small caps have traded in a narrow sideways range year to date, but we may finally be seeing the McKellen Summation Index give a proper buy signal this week. So we've talked about small caps. They've had a rough year, but they've been trading sideways for so long, but it looks like this McKellen signal is turning around. And it makes sense. This is a very long period of consolidation. It's going to break out eventually. If it didn't break down, but considering we're in a long-term bull market, it's more likely to break up than down. Trend fragility has been high for weeks, but it's eased up recently following some choppy action in the markets. So once again, in our HUD, we have our own trend fragility indicator. We could zoom in here. One of them is aggregate fund flows. And we love our indicators, right? It just gives us more data to see what's going on. But you can see this red line is not near levels where we usually see a drop in the market. Same thing in hedge fund positioning. This red line is not near this red line, which is all markets really are, right? A bunch of lines. No, I'm kidding. The bull bear survey or indicator, you could see it did actually hit that high, but we didn't get that correction really. And now it's coming back down, which is good because we don't want sentiment to be too bullish, right? That's usually bad for a bull market. Put to call ratio is also coming down as well. Another good sign. So right now, large caps are making new highs, mid caps are breaking out, and small caps look like they could soon join the party. So this buy climax is in full effect. And you can see right here as I'm recording this, NASDAQ is having another super strong day. Everything looks good. Another area we're looking at is precious metals, in particular silver. It's rebounding off a significant 12-month support level, which you can see right here, this green line. And net spec positioning has actually eased up a good deal over the last few weeks and is now neutral. And this is the same thing as sentiment. You don't want the speculators being too bullish because that's a bad sign. Now you got to remember roughly 80% of breakouts from trading ranges fail. So if this was trying to break down right here, most likely going to fail. And one way you could play something like this is mean reversion. So if it's bouncing off this support line, maybe you could ride it the way up. Now, will it break out from this range? Well, again, 80% fail. So likely no, but what do we say? The more times it touches that point, which if it rebounds all the way back up, that'll be 1, 2, 3, 4, right? The more likely it is eventually going to break through. And the same thing happens vice versa. The more times it touches this bottom, the more likely it'll break through as well. Ethereum is up roughly 50% since we said that the bear move was over. And now it's in a major compression zone right here. You can see that. And it's basically building energy for its next bull thrust higher, which will likely happen soon. So you want to keep an eye out here. When it breaks above, it's the time to go in. Now, when I made that little quip about markets just being lines on charts, that's how a lot of people feel about technical analysis. But let's see what Bruce Kovner has to say about it. He says, for me, technical analysis is like a thermometer. Fundamentalists who say they are not going to pay attention to the charts are like a doctor who says he's not going to take a patient's temperature. But of course, that would be sheer folly. Who says this in real life? This is a better sentence. But of course, that would be stupid. If you are a responsible participant in the market, you always want to know where the market is, whether it's hot and excitable or cold and stagnant. Kind of like my love life, huh? Yeah? No. You want to know everything you can about the market to give you an edge. And that's exactly why at Macro Ops we use something called the Marcus trifecta, which is another market wizard, Michael Marcus, but we use technicals, fundamentals, and sentiment. We combine those three because those are the three main inputs when you're analyzing markets. So all this stuff you see every week falls under one of those three categories, and that's why we look at it. Now, if you want a simple system that'll do all that for you, then make sure you check out our Fallible strategy, which you know I talk about all the time. And as usual, we'll have a link to this training that will explain it in this video and down below in the description and comments. Same strategy I use, same strategy all our Fallible members use. Makes life a lot easier because it's already pre-built and it works really well. So if you want to check that out, click this right here and I will see you in that training.